I have been asked numerous times what my worldview on real estate in light of Bitcoin is. I own Bitcoin, I own real estate, and oftentimes the investors in these two asset classes have trouble seeing the perspectives and arguments for each other different perspective. Real estate people tend to not understand Bitcoin, with it being intangible and with them not having incomes and cash flows and those trade-offs. And likewise, Bitcoiners have trouble understanding why own real estate at all if it's just going to keep going down in Bitcoin terms. And so there's a lot of miscommunication there, I think. And so I just want to provide my worldview for both these asset classes, why I still own both these asset classes, and why I actually want more in both of these asset classes over time. So in this video, I'm going to break it down. Hopefully the visuals help explain my methodology and line of thinking here. So without further ado, let's start with something that is common, something that's universal. Unit bias. Unit bias is, let's see if I start down here. So in this green line, we're going to have the US dollar, USD. I'm in the United States, so obviously adjust this to whatever currency you're within. But we view the US dollar as something that's consistent and stable over time, something that's flat, or at least that's what, when we look out the world, that's what we're pricing things in. That's what we're communicating value to each other within. Now, at the same time, we have assets that go up in price. So let's take an asset class here. Let's say this is real estate, something that goes up pretty steadily over time. Maybe you'll have big upswings and downswings. Maybe we have something like the Great Financial Crisis over here. But one way or another, real estate goes up over time pretty steadily. Now, let's compare that to something like Bitcoin, or in this case, exactly Bitcoin. Now, my orange marker is not working, so we have to forgive the red color. But red here, representing Bitcoin, just goes up like that, or actually even more accurately, it goes up super volatile like that, much faster. Now, when people are looking at the world through this frame of reference, what it looks like is that the dollar is stable, real estate goes up steadily over time, and Bitcoin is a super volatile thing that's just hyper appreciating over time. This is the worldview 99.5 or 99.9% of the world has. And in order to understand my perspective on real estate, my perspective on Bitcoin, you have to understand this is not the worldview that I subscribe to personally. I have a very different worldview, a very different unit bias that my brain, I've trained my brain to adjust for. And I think once you view the world through that lens, then the case for both real estate and Bitcoin become much more clear. See, my stability is not that green line of the US dollar. My stability is Bitcoin. It's a red line up there. Again, forgive it not being orange, but this is what we will call Bitcoin. So this is what I view Bitcoin as. And real estate, now you'll notice if you're pricing in terms of Bitcoin, is no longer going up, but it's going down. And so all of a sudden, a great financial crisis over here is not real estate crashing in price. It's skyrocketing in price in terms of a different currency. And let's look at the US dollar. What's the US dollar do when you view it from this worldview? The US dollar goes down even further than real estate. And so this is crucial to understanding why Bitcoiners are so anti-real estate and understanding why we view Bitcoin as a lower risk asset. See, if you price real estate in terms of dollars, what real estate does is it trends up over time, up and to the right forever. I know people that have sold their house for 3 times, 5 times, 10 times what they bought it for in terms of dollars. And I would argue the reason is not because the house in blue is going up as much as I would argue that it's because the green line, the dollar, is trending down. Now, you could argue that land perhaps is going up over time in real purchasing power because as we have more people, more businesses, more demand, more productivity being priced into this quasi-scarce, not finite, but scarce commodity, scarce asset of real estate, you could argue the real purchasing power is going up. However, as I'll get to in a moment, I believe that is debased into this green line over time. So from the Bitcoin perspective, real estate trends down perpetually. Yes, it goes up in terms of the dollar because at whatever point on this line, you could buy real estate and in the future, you could sell it for even during recessions and great financial crises, you can buy it for a certain amount and then later sell it for a different amount. That's higher in dollars because the dollars have fallen in value, but still in terms of Bitcoin is lower than what you originally bought it for. So if you're pricing your world in terms of dollars, it is always a good time to buy real estate because it's always going up. Because again, remember, in terms of the green line, the blue line is always trending up to the right. But in terms of Bitcoin, the stable line, where there's a stable number of monetary units, the real estate is going down perpetually over time. So this is the fundamental shift that Bitcoin, that really is the orange pill, or really is the rabbit hole that Bitcoiners go through, is realizing that, wait a second, political currency, US dollars here, is not the absolute stable metric of determining value and determining productivity in the world. There has to be something else. And that's because we can create or destroy more of these green political currency units at any time we desire. We can change interest rates, we can change the number of dollars at any point, meaning that we will debase this forever because we have the ability to. Compare that to something like Bitcoin that's based on an equation, based on math, not in the control of human beings. Something that has a finite amount at which all the productivity gains and all the fiat debasement can be priced into that. So because Bitcoiners view this as a more stable way of looking at value through the world, then we see these things go down. So why do dollars go down? Dollars go down because of human intervention. We decide we want to print more money because we want to save credit markets, we want to lower interest rates, we want to force housing prices and stock prices to go up because we all like that when we feel richer, but we're misidentifying that prosperity gain as, oh, my real estate and stocks are going up, when in reality what's happening is that we're simply killing the dollar faster than the real estate holds its value. That is a really uncomfortable, a really offensive, and really counterintuitive conclusion for most people, but it's what I believe is most correct. Your real estate is not going up in terms of US dollars at an exponential pace because the land is becoming exponentially more valuable. It is going up because we are exponentially diluting the purchasing power of the currency at which you are pricing the real estate within. So I hope that idea kind of makes sense on its own. And so then let's get to the next big point about centralization. So centralization. If I have money with, I know it's not a face, but just go with me. So if I have a certain number of monetary units and you have a certain number of monetary units, you know, these are my currency units, these are your currency units. Let's say I have 100 and let's say you have 100. Now all of a sudden, if I come in and I say, wait a minute, we have too much debt. We have to bail me out. We have to bail whoever this is out. And now all of a sudden we're going to give me 400 monetary units. And we're going to give you, now instead of 100, we're going to give you 200. You know, we're going to give you a stimulus check and give you twice the money. Don't you like me? Don't you want to vote for me? I just doubled your money, right? It's wrong because you just doubled your money. I should probably erase that. You just doubled your money, but I quadrupled my money. So before, when we had 50-50, I had 50%, you had 50%. Now I have 2/3 and you have 1/3. So really, you did not double your money. Yes, you doubled your monetary units in nominal terms, but in real terms, I've just harvested, what would that be, about a third of your wealth, more or less. We've gone from having 50% and 50% to now I have 66% and you have 33%. So again, this is why we debase currency. This is why we dilute the purchasing power of dollars over time. It's because if we have an insolvency with any institution, with a government, with a company, with a board, with whatever it is, when we have insolvency, we could say, sorry, we're bankrupt, we're at a default, we're not going to pay our debts. It's a lot easier to do this subtle trick, debase the currency, and pay that currency back. And because we are paying back insolvency with increasingly insolvent dollars, it means that this must centralize. Notice that what's happening here is inherently, inevitably, 100% of the time, this results in centralization. Monetary energy is flowing from a decentralized world into a centralized world. And see, this is ultimately what's happening. The more conservative folks tend to blame the politicians and ever-growing government bureaucracy and expansion and influence. And the liberals tend to blame the corporatists and the capitalists and Wall Street, whoever. But really, they're both explaining the same thing. They're both explaining this black arrow up here, that when you have insolvency and you are incentivized to, instead of doing the hard thing, let's compare it to addiction. Instead of the hard thing, coming off the drugs, you just debase things a little bit more so you can kick the can down the road and continue the addiction. And this is what happens. That crony capitalism argument and that government bureaucracy argument, it's describing the same thing. It's describing this arrow of monetary energy flowing into centralization because it has to. When you are trying to pay back insolvency in real terms back with a nominal, when you're trying to avoid a nominal default, you will destroy the real purchasing power of the currency. You will give people money. You'll increase their wages. You will give them stimulus checks. You will give them entitlement programs. You will give them more of what they want, and they'll elect you into office for it. When they're electing you into office for a lie, when they're electing you into office to flow monetary energy to an increasingly centralized entity. And so this is the basic concept here, that printing money inherently 100% of the time is a centralizing action. This is the idea. What does that look like over time? Well, again, let's go back to real estate. If we think of productivity as a line that's going up as technology gets better and better and better, what's happening as we print more money? As we print more money, the prices of assets go up. So this green line is the US dollar. We're printing more money. That's not showing up very well, but we're printing more money. And as we're doing that, housing prices are going up, stock prices are going up, grocery prices are going up. The prices of all these things are going up. And this wedge here, this wedge is growing over time. Wages do not keep up with the rising cost of living. Wages do not keep up with the increasing centralization that is inevitable when you begin printing money. It just can't. It just doesn't. And so what that means is that people feel like they're getting richer at first because their incomes go up and their incomes go up and their house prices go up and their 401k goes up. They think it's all going well, when in reality, it's just centralizing more and more and more, continuously up and up forever. And it has to be that way. Because if this were a stop, let's say that we decide, we want to elect a politician that's going to make everything more equal, that's going to make everything better, and we're actually going to print less money. Well, what does this entail then? If we want to have housing prices come back to reality, if we want to have stock valuations come back to reality, if we want these things, if we want to erode the insolvency back to rationality, what you're calling for is a massive housing crash, a massive credit unwind, a massive stock. It's something we won't demand. As soon as you begin doing this, what happens is that we say, stop. The pain of stopping the addiction is too much. We just have to revert back and keep going. This is exactly what happened in 2008. This is exactly what happened in 2020. As credit begins to unwind, as defunct and ridiculous lending products, as credit becomes too absurd or we want to return back to reality, or the math is trying to force us to return back to reality, we say the pain is too much, my house prices are going down, foreclosures are getting too high, politicians become unpopular, and 100% of the time, what we do with our human nature is we put someone into power, let's say me in this case, vote for me, because I can fix things, and I can put things on the right track. And so we'll do that 100% of the time. We will demand the stimulus, we'll demand the entitlements, we'll demand the bailouts, we'll demand the easiest solution right before us so we can kick the can down the road and continue the insolvency to an ever greater degree. Now, what does this mean for real estate? What this means for real estate is that the wedge is increasing. Real estate prices are going up far faster than incomes are keeping up and people's ability to make payments are keeping up, their rent's going up. Now, incomes will go up, but they will not go up as fast as real estate prices, and that's because it has to centralize. If you decentralize the money printing, you erode all the benefits of having a real default and avoiding the nominal default in the first place. You do nothing to solve the problem of continuing the can down the road, you just change the numbers on the screen. You have to have the money continue to centralize in order to avoid that default. This is why we see misinformation continuing to become apparent. This is why trust in institutions is going down. This is why trust in the government and all the three-letter agencies and all the government bureaucracies is going down, not just in the United States, but across the world. This is why the governments are having to have even more bold, more audacious, more absurd claims about restricting rights and encroaching people's freedoms, is because they have to. If they don't, and you let the free market, if you give the free market the ability to be rational, and they have the green line come back down to the black line, then you have a credit unwind. Then you have all these problems and nobody's going to vote for you. And even if you do the right thing and you do allow that decentralization to happen, if you do allow these things to come back down, all that's going to happen is that you're going to get booted out because nobody likes a recession. Nobody likes when their house prices are coming down. Nobody likes when the lie is being deflated that we've been building up over the last few decades. And they'll just vote someone else in your place. So you might as well just continue the delusion. So with that said, what's going to happen to real estate? I've said that like 3 times now. My opinion is that the black line will keep going up. Productivity will keep going up. And real estate will keep going up faster and faster and faster and faster. Probably more volatile than this. It might go up and it might go down. And in fact, it'll probably get more volatile as interest rates become more volatile and everything else changes more and more and more. But whoops, am I still recording? Yes, I am. Excellent. Basically what happens is that this wedge gets wider and wider. This wedge from printing money gets bigger and bigger and bigger each cycle. Housing prices are much less affordable now than they were 10 years ago. And 10 years from today, yeah, I'm bullish on real estate if we're pricing in terms of USD. I am bearish real estate if we are pricing in terms of BTC. Again, because BTC is absolutely scarce, real estate is relatively scarce. US dollars have to be more abundant. They have to be less scarce than the real estate. They can't be more scarce, because if they are more scarce, then the insolvency rears its ugly head, housing prices come down, and we eventually vote someone in to replace the person to continue housing prices to go up. So in terms of USD, real estate will go up forever, and it has to. And there's a point at which it does it, and I'll get to that in just a moment. In terms of Bitcoin, real estate will continue to go down forever, exponentially. And so, at what point does this begin to reverse? At what point does real estate no longer start going up in US dollars? It is when the discrepancy between reality and delusion gets so large that the people revolt. It's exactly what happens. That's what happened in the years leading up to World War II. It's what happened in many other dictatorships and nations in the past. We have to keep housing prices going up exponentially, farther and farther away from reality. And eventually, when this is so great that people can no longer afford the rents, they can no longer afford the mortgage payments, they can no longer afford housing at all, they begin to rebel. They begin to revolt. And when the government can no longer keep up this delusion of this blue line, enforced by the printing of this green line of political currency units, when we can no longer keep the delusion up, when we no longer, what is money? Money is trust. When we no longer can keep forcing that up, what happens is it crashes back down to reality. Housing prices come back down to reality where they should have been the whole time. And that means probably, as things become less certain, as things become more cannibalizing in a monetary and economic sense, then that's when productivity goes down. And this is where you see massive problems for people in history, and where I think we'll see massive problems in the future. I don't know when in the future, it's anyone's guess, but that's my basic assumption, that eventually housing prices will rise so much, things will become so unaffordable, that people will just rebel, and they'll ask the government to intervene, to help, to tax the landlords, tax the greedy landlords. And my point here is that it's not the landlord's fault. They're not the original problem. It's not the landlord's fault, it's not the contractor's fault, it's not the tenant's fault, it's not even the bank's fault. The problem is human nature, which means that the landlord's responsible, the tenants are responsible, the contractors are responsible, and the bank and the government, and everyone that votes for anyone in the government. Everyone is responsible, and so simultaneously, no one is responsible. It's the bitter truth that none of us want to accept. We'd rather just point to a group. We'd rather point to Wall Street. We'd rather point to the banks. We'd rather point to this person or that lobbyist or whoever. And while they're all right, at the same time, if you're going to point at them, you also have to point at yourself. And so that's where I think we're heading. Real estate will just probably keep going up in terms of the US dollar. It'll probably keep going down in terms of Bitcoin, until the point at which it has gone up so far in terms of the US dollar, faster than productivity, faster than incomes, faster than wages, that eventually the people demand the government to do something. They could do this in multiple ways. The government could implement rent controls. The government could implement property taxes. They could just seize land outright. Perhaps landlords with 5 or more properties, 5 properties or more, all those properties will just confiscate. Or all those properties will have double the property tax. Or all those properties will have rent controls. Or maybe for every additional property, you have more and more rent controls. And as we print more and more dollars and increases exponentially, those rent controls become more and more and more oppressive. They become more and more obstructive. See, what's happening here, it's frustrating me because online we talk about how BlackRock and the big greedy corporations and landlords are buying up all the real estate. Your problem's not BlackRock. All they are doing is they're communicating to the market that there is not enough housing. And we got to buy this housing to force the housing prices up so that we can incentivize people to build more properties, to build and construct more housing units so that eventually the prices can go down. That's how a free market works. When there is something that is scarce, the most logical, rational thing to do in your own self-interest is to buy that, force the price up, and then eventually the price will be forced up so much that supply comes back in, we can build more houses. But this is precisely why, again, monetary energy flows to centralization. This is why we see less and less housing being built, even though we need more and more housing. This is precisely why we see such a delay in housing. This is precisely why it is so difficult to get things built. It's because the red tape and the regulation aids in this process. The more scarce you can keep housing, the more you can force housing prices up, meaning the less probable that we will have a credit unwind, and the longer you can continue the delusion. Eventually to the point where the delusion comes back in reality and the people revolt. Maybe it's violent, maybe it's not violent, I don't know. Maybe it's taxes, maybe it's direct confiscation. But eventually, this delusion that we can just print monetary energy out of thin air will erode, and that will result in the government confiscating the things that do remain that are real, including real estate. This is not specific to real estate, probably with gold, probably with bonds, probably with stocks, probably with every investment and every asset, every security, every commodity they can get their hands on. It just happens to be that real estate is, well, it depends on the historical example, but oftentimes it's last. Oftentimes it's one of the things that the governments come after last because so many people own real estate. It's a lot easier for a government to control bonds because the whole bond market is under their control. With real estate, it's a much larger, much broader, much more complicated market. So why is real estate investable? We've been pretty negative on real estate. Why is it investable? Well, it comes down to a simple idea. Simple idea being that if you view the world through that lens, at which you have real estate prices falling down, even if you view the world that way, well, and the dollar has to go down faster than the real estate, well, then what you could do is you can take political currency, you can take the political currency, borrow it, buy the real estate, and then over time, you make money. You don't make money because the real estate's going up, because it's not going up, it's going down. You make money by leveraging that gap of, actually it goes all the way down here, because you're borrowing in terms of USD. But basically, borrow in the weaker asset to buy the stronger asset. And over time, the longer your time horizon, the more the government, the more the centralized money printers will aid you in that. And so this is the unfortunate moral dilemma, convoluted reality, is that yes, you're providing a service, you're providing a business of real estate here in blue, but the majority of your profits, the majority of the reason it makes sense is you can borrow the weaker asset that's going to fall faster than the real estate. And this is the horrible reality when you force real estate prices to go up forever, is that they become increasingly expensive. You become increasingly reliant on stimulus and interest rates being low and longer amortizations. I mean, that's the horrible reality. And we're probably just going to see that continue. We'll probably see longer and longer amortizations. We'll see a greater and greater need for lower interest rates. And if we don't get lower interest rates, we have to raise interest rates. We will print an absurdly greater amount of money to compensate for those interest rates, because if we have to have interest rates go up to artificially pretend like things are fine and we have to dilute it somewhere else, basically the only case for real estate, in my worldview, looking from the Bitcoin lens where Bitcoin is flat and everything is falling in terms of Bitcoin, the only reason it makes any sense to invest in real estate is this, is borrowing in terms of the weaker asset to buy the stronger asset eventually, so that the yields, so that the profits, and so that the businesses from both the business and the debasement of the dollar can flow into the strongest asset. So I do own all three of these things. These are really the only three things I can justify owning: Bitcoin, US dollars, and real estate. Bitcoin, because it's the strongest currency in the world, the US dollar because it's the strongest political currency in the world, and real estate because it's something that's tangible you can easily borrow US dollars against that you can then benefit from. It's very hard to borrow dollars to buy Bitcoin because, again, most people, all the way back to the beginning of the video, most people are viewing Bitcoin from that volatile lens going up forever, so they aren't willing to lend you the dollars. But because they view real estate as a less volatile thing that's going up forever, they will be willing to lend you that political currency for real estate. So long term, Bitcoin makes far more sense. Shorter term, real estate seems to be a viable alternate, at least for when it comes to finding a business that is probably going to produce returns, that also has a built-in benefit of being able to directly benefit from the unfortunate centralization of money. Basically, you're a real estate investor trying to communicate to the market, we need to build more real estate. You're trying to communicate to the world that, hey, we need real estate now, we need more supply now. You're forcing prices up to show the world we need more construction, we need more housing units now. And unfortunately, it's a pretty safe bet you'll make money because the government will choke point that construction. They will choke point the supply of new housing. And so as long as that's true, as long as the government and human nature continue to centralize money, and as long as we continue printing currency faster than we keep building real estate, to me, both of these things make a lot of sense. However, in the long term, there's only one winning store of monetary premium, and that would be Bitcoin. So this is why I prefer real estate over stocks or bonds, because you can borrow US dollars for that asset. You cannot do the same thing with stocks or bonds in the same degree, or gold or Bitcoin for that matter, but you can do it with real estate because real estate gives you monthly paychecks. Every month real estate gives you a little bit of income because real estate is not so much an asset as it is a business. The idea of passive real estate is not true. It is a business. But basically when you're borrowing dollars to buy the real estate, yes, you're buying the asset, which the government will artificially choke more and more and more. You're also buying a business that can then service that debt in the meantime while you wait in this longer time horizon for the purchasing power of the dollar that you originally borrowed from within to decrease in value. So that's why I own Bitcoin. That's why I own real estate. That's why I own the US dollar. Obviously, over time, Bitcoin's my largest conviction holding, the dollar is my lowest conviction holding, but all three of these are useful when it comes to securing purchasing power in the long-term future. And that's ultimately what I'm trying to explain here, purchasing power. Over time, Bitcoin is designed to retain its purchasing power. Over time, the dollar is designed to inherently lose its purchasing power faster than real estate and stocks and bonds and other assets that will also reduce their purchasing power over time as we produce more productivity. This is designed to keep it. This is going to lose it because humans are more productive and create more value in the future, and this has to go down faster than the real estate. So hopefully that makes sense to you. Probably this is not a new concept for some of you, but for others of you it may be really useful. So I hope this has been useful for you. Thanks.